What if your investment property was hit by a flood tomorrow? Every year, flooding costs Australians millions of dollars, yet so many investors still believe that won't happen to me. Hi, Andy here from Duo Insurance. Here's the reality. Australia has suffered some of the world's highest financial losses from severe weather, second only to the United States, with southeast Queensland being Australia's severe weather hotspot. In this video, we'll unpack why flood risk is one of the most underestimated threats to your property and how being underprepared can cost you far more than you realize. Flooding isn't something that only happens in regional towns or next to big rivers. It's a growing problem right across Australia, from suburbs on the coast to properties in low-lying neighbourhoods that flood after heavy rain. The Insurance Council of Australia estimates that more than 675,000 properties, about 1 in every 25, face a significant flood risk each year. And here's the big one. Over 2 million Australian homes have already lost a combined $42 billion in value because of flood risk. For property investors, that means real financial exposure, from rising insurance costs to long rebuild times and declining property values. Flooding isn't a one-off event anymore. It's now Australia's most common and costly natural disasters. So what really happens when your property isn't prepared for flooding? Let's break it down. When floodwaters rise, the damage doesn't stop when the water goes down. Property investors face the true cost long after the cleanup. Flooding can cause major structural issues, damage to walls, floors, electrical systems, and mould that spreads through the building if not treated quickly. Repairs can take months, and during that time, your property might be uninhabitable. Without proper cover for loss of rent, that's income gone, while you're still paying for your mortgage. Imagine getting the call from the tenant after a storm. Water through the ceiling, no power, and your insurance only covers half the damage. It happens more often than you think. Many investors get caught by surprise, and when they assume the standard home insurance covers everything. The truth is, not all flood cover is the same. Some policies exclude certain type of floods, like storm surge or flash floods. Others had higher excesses or reduced coverage in high-risk zones. Even if you think you're insured, it's worth checking if you are covered for the right kind of flooding. So, how can you protect your investment before the next big storm hits? Let's look at what you can do to stay ahead of the risk. You can do a lot to reduce your flood risk, and it starts by knowing where you stand. Step 1. Assess the property's flood risk. Check the local council's flood maps, or use the insurer's database to see whether your home or investment property sits in a flood-prone area. Step 2. Review your insurance policy wording carefully. Confirm that flood is actually included, not just storms or water damage, and make sure your sum insured reflects today's rebuild cost. If your property is leased, double check that the policy includes loss of rent cover, so you're protected if your home becomes uninhabitable. Step 3, take action on site. Improve your drainage, raise power points and electrical systems above known flood levels, and use flood-resistant materials for lower floors. Even simple upgrades like proper landscaping or securing outdoor items that can block drains can make a huge difference. If you rent your property out, make sure your tenants know what to do in the event of flooding, how to evacuate safely, who to contact, and where emergency supplies are kept. Clear communication like this doesn't just protect your tenants, it can help speed up your insurance claims and reduce your stress if the worst does happen. Remember, prevention always costs less than repair. So, what if flooding actually happens? Safety comes first. If authorities tell you to evacuate, do it immediately and don't re-enter until it's declared safe. Once the water recedes, it's important to document the damage before you start cleaning up. Take photos or videos of every affected area, floors, walls, furniture, even water depth marks. Then, contact your insurer or broker straight away. Provide as much detail as possible and ask what temporary repairs you can make while waiting for an assessor. Keep receipts of all repairs or cleanup costs, as they may be reimbursed later. And finally, once recovery begins, review what worked, what didn't, update your insurance cover, strengthen vulnerable areas, and plan improvements so you're better protected next time. A flood is stressful, but being organized and insured properly can make the recovery a whole lot easier. Flooding isn't something you can predict, but being prepared can make all the difference. speak with an insurance broker who understands investment properties, or get a professional replacement cost report from a quantity surveyor. Here at Duo Insurance, we're dedicated to helping property investors protect the real value of their assets with the right insurance cover. Stay one step ahead, review, and update your cover before the next storm hits.